The Bitcoin Fear and Greed Index chart provides insights into the current bullish or bearish sentiment amongst investors. But does the indicator actually give us anything actionable, or should we shift our attention to other BTC metrics? Today, we're going to be looking at whether the Bitcoin Fear and Greed Index chart is still a metric you should be paying attention to, and where better to start than the Bitcoin Fear and Greed Index chart we have here on BitcoinMagazinePro.com. And if you weren't already aware, the Bitcoin Fear and Greed Index chart is looking at a number of different metrics and data points to give us a good overall view on the sentiment amongst Bitcoin traders and investors. We'll just scroll down here. What we can see is on the 0 to 100 scale, 0 indicating an immense amount of extreme fear in the market, whereas 100 would be extreme greed in the market, everyone incredibly bullish, and then around that 50 is just a more neutral sentiment. What we can see if we continue scrolling down here, that this is taken into account, the volatility of the BTC price action. Obviously, the more volatile something is, the more bearish people may be, more fearful, especially considering volatility is usually its highest on big downside moves. Momentum and volume, if people are buying, they're usually a little bit more bullish. Social media sentiment analysis, dominance of Bitcoin relative to other cryptocurrencies. If we're seeing more speculative, smaller market cap coins pumping, then people are usually a little overly greedy in the market. And then Google Trends as well. And what we can do is if we just scroll up, there is this CSV data download button, or if you are a site subscriber, you have access to our API. So what I've done is through our API here is just got all of the raw data for all of this Bitcoin Fear and Greed Index. And what I wanted to do is actually see if this is actionable. Obviously, if you just look at the chart, you can see it's green when it goes up and red when it goes down. But I wanted to see if there was a way we could actually take action on this chart to not just have it as a useful, nice visual tool, but to be able to use it at certain points to potentially help with our accumulation and profit taking with our BTC investments. So there wasn't a very easy way to do this. What I had to do was take all of this raw data from our API, put it into PineScript, and then once I've done all that, we just go over to TradingView over here. And as we can see, this is the Bitcoin Fear and Greed Index overlaid onto price action. So pretty much what you're able to get for free on the site. But this way, I can actually manipulate the data a little bit more and turn it into a little bit of a strategy potentially to see how it works. So what we can do is see obviously the exact same thing we can see on the site. When this is incredibly high on this 0 to 100 scale, there is extreme greed in the market. People are probably overly bullish and we're a little bit overbought to the upside. And the same is true for the downside. Once we have these incredibly low values, people are incredibly bearish or fearful on the future of BTC. What I did is just come up with a super simple strategy to see if this actually works. So the data goes back to February 2018. So I wanted to see if we could actually outperform just buy and hold Bitcoin using this data. So the way I did that was actually to just assume we would be accumulating BTC beneath a value of 20 or beneath or equal to a value of 20. So as we can see on this white line here, if we're beneath that or equal to that, we're going to just put 1% of our capital into BTC every day that it's beneath that. And at 80, we're going to do the opposite. Every time we're at 80 or above 80, so 80 or above, we're going to take profit on 1% of our holding positions. So we started with $100 and we're beneath that, we're buying $1. And then once we're above that, we're selling 1% of our BTC holdings. I got that right. I'd also just like to reiterate quickly that even though I have made this in TradingView, it's not going to update ever. So I don't have access to it. I can't provide it. This is actually using all of the raw data from the API. So the code is thousands of lines long. It's unnecessarily complex, but you aren't able to access external data in TradingView currently for our metrics. But this is just one way we can do this for a quick experiment. So now what I've done is just added all the trades onto the chart. So if we just scroll along here, what we can see is, again, buying every time we're at or beneath this level. So all the way back here in 2018, as far back as the data allows us to go, we were accumulating on these dips and then very heavily at the tail end of the bear cycle. And then here, as we ran up again from around $3,000-$4,000 to $13,000 or $14,000, we've begun taking some profit, very heavily accumulating during the COVID 2020 dip. And then all the way up to the all-time high we set at above $60,000, accumulated once again as we dipped beneath that and sold just a little bit at the next all-time high. And then we accumulated very heavily all the way down, especially as Bitcoin dropped from beneath its $30,000 support to around $20,000, slightly beneath that. And then a little bit again right at the bottom there. And then we can see as we ran up to $74,000, our previous all-time high, we've taken some profit. And now as we've surpassed $100,000, we've begun profit taking again with a little bit of accumulation accumulation just in that period of 6, 7, 8 months of choppy consolidationary price action. So how did this actually perform? Because obviously this looks like it visually is doing well, but did this outperform Bitcoin? This very, very simple strategy. No weird, obscure confluence metrics or anything. What we can see is this returned 999.23% profit on our initial $100 using 1% equity per trade. And if we go into the performance summary here, we can actually see that the open profit is another 146%. Need my glasses on. So overall, about 1045% profit, which isn't bad considering buy and hold of BTC. In fact, I got that wrong. 1,145% profit. So I was wrong to begin with. So the buy and hold performance was only 1,046%. So about 100% more gains from this fear and greed index strategy than buying and holding. From very simple 1% buy, 1% sells. That's it. You'd have returned about 1,000% profit, about a 10x on your position, and you'd still have a considerable amount of profit still open, more so than buy and hold. So super quick video just to show that the fear and greed index, any metric we have, can be used effectively, especially if you're using it alongside other metrics. Of course, this is just one in isolation. I wouldn't recommend using just this metric for your trading strategy, but historically it's worked well. There's good indications it's going to continue working well in the future, and especially if you use this alongside some other metrics for confluence, some on-chain data points and some macroeconomic factors, there's no reason why this shouldn't be potentially something you consider to implement as part of your strategy as well. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources, the one resource we discussed today, as well as the many more we have available on BitcoinMagazinePro.com, your #1 source for Bitcoin analysis. So just to summarize, the Bitcoin Fear and Greed Index is formed by analyzing sentiment from multiple different data sources to gauge whether Bitcoin investors are currently bullish or bearish on the future outlook of price action. And while this tool is quite simplistic, it is literally just overlaying a 0 to 100 scale over price action. If implemented correctly, it can still be incredibly effective and even outperform buy and hold from that initial purchase in February 2018, which is pretty amazing considering the Bitcoin price was only a few $1,000s then, and since then we've surpassed $100,000, and this has performed better than that. And tools like this, like I said, are best used alongside others to provide confluence. Basically, if one tool is bullish and then another's bullish and then another's bullish, it kind of reiterates and reaffirms that bullish factor. As soon as we start getting mixed signals, like if we're incredibly greedy and alongside hitting resistance on other metrics, then that really solidifies that maybe a pullback is overdue. But we do have to acknowledge, though, that on its own it can be used and conditions can be overwhelmingly fearful or greedy for incredibly long periods of time. If you were to just buy 100% as soon as we were beneath 20 and sell 100% as soon as we were above 80, it wasn't profitable at all. You really need to factor in that this is scaling in and scaling out, which, like I said, alongside other metrics, scaling in and scaling out of your positions is ultimately the best way to outperform just simple buy and hold. But this definitely should be a metric that you do consider as part of your analysis. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the Bitcoin Fear and Greed Index. Is this a tool that you use in your investing and analysis, or do you think that even with the data kind of disproving that it's useless, that it still is in fact useless and you just overlook it every time? Whatever you do, as long as it works for you, I don't really care. We're all here to just try and make more Bitcoin. So whatever works, stick with it. And as always, thanks for watching. I'll see you in the next one.